The IPO train hasn't been running at nearly the pace you'd like. Given that we're overseas, let's talk for a moment about the efforts that the New York Stock Exchange has made to solicit listings outside America.
Sure, and I hate to argue with you right off the bat. I reject the premise. The IPO train is chugging along. In fact, and part of the reason why people may not know that is it's happening as we're here in Davos. We're going to have in January the most capital ever raised for IPOs in the history of the New York Stock Exchange. We're going to have 5 IPOs raising $700 million or more, which is kind of the break point between a large and small IPO. And in fact, we had the largest Latin American technology IPO yesterday, PagSeguro, that upsized, raised $2.25 billion, and it's a huge success. But to answer your question directly, there's a lot of exciting private companies here that someday could likely be public companies. And definitely part of what I'm doing here is huffing around from meeting to meeting, meeting not just with our listed companies and with policymakers, but with some of the exciting pre-IPO companies.
Well, all of the attention, as you know, here and elsewhere is on what's going to happen with Aramco. But let's look beyond Aramco for a moment. What are some of the other big prizes for public listings that you'd like to win for the New York Stock Exchange?
Sure. Well, I'll give you an obvious one that's here in Davos. It's Uber. It's a transformative company, and they've stated publicly that they intend to IPO the company. So certainly, as an American technology company, and we're increasingly the home of great American technology companies, we'll throw our hat in the ring for Uber. But I'll give you a couple that aren't.
Airbnb is another, I would imagine.
Yeah, not here in Davos, but Airbnb, fabulous company. And as you would imagine, we would be very eager to see them on the stock exchange. But a couple not so obvious. There's some really good cyber companies here, like CrowdStrike, that could ultimately someday be a public company, or Cloudflare, which is a technology company that's growing by leaps and bounds. So spending a lot of time with private companies.
How long do you think it's going to take before, because Uber, for example, and Airbnb have both been private for an awfully long time, and they've grown to be enormous companies as private companies. And that gestation period seems to be longer and longer and longer. What can you do to reawaken, if you will, in the minds of the financial backers that the public market is a great place for these companies to be, the sooner the better?
Great question. And the good news is those companies will ultimately go public. The bad news, as you point out, is there's been a whole lot of wealth creation in their pre-IPO period. And during that pre-IPO period, the man and woman on the street don't have the same availability to be a part of that wealth creation as they do when a company is public. So as a societal matter, I think it's problematic. However, there's really only about 10 or a dozen companies that we're talking about that can stay public as long as an Uber or an Airbnb. Private, as long as an Uber or an Airbnb. In terms of what we can do about it, regulation in the United States has grown with Sarbanes-Oxley, with Dodd-Frank, quite frankly, with exchange regulations that have been layered on over the last 20 years. And we can all, as a community, look at it and say, okay, what's a regulation that protects investors and provides more transparency and levels the playing field? And what is regulation that's just duplicative and maybe hurtful to business?
Is a loosening of regulations by definition something that makes it easier for dodgy or fraudulent companies to go public?
The trade-off with anytime you touch regulation, the trade-off is, on the one hand, you're stifling business. On the other hand, you may not be protecting investors in an appropriate fashion. So I'm not talking about willy-nilly ripping out regulations, but we can look at things a whole lot smarter than we are. And I'll give you an example. Just the simple act, Chairman Clayton came in, running the SEC, and he allowed all companies to file their prospectus confidentially with a stroke of a pen. That's just a good, smart regulation. That doesn't hurt any investors. It encourages companies to go through that process of going public because they have less risk that if they choose not to go public, all their competitors know all their business.
Speaking of competitors, you've got some. There are a growing number of competitors for listings, IEX among them, long-term stock exchange. Other companies want to take your leadership role away in ETFs. How do you confront the competitive challenge? What's the strategy?
The conversation here at Davos, when it comes to competition, is the New York Stock Exchange, the London Stock Exchange, the Hong Kong Stock Exchange. And I think it's a really important conversation. I mean,
you're more concerned about those competitors.
as an American, I mean, part of the reason why America led the world, frankly, since World War II, and you may even argue World War I, was the financial leadership and New York as the financial capital of the world. And other countries see an opportunity with changing tectonic plates geopolitically to maybe wrest that crown from New York. So that's where the real competition lies for us, and including for some of these great global listings, the Alibaba, if you will, of 5 years from now. I want to make sure they come to New York.
Is the SEC Chairman Jay Clayton sensitive to this?
Very, very. You know, he's from what I've seen, and I don't want to put words in his mouth. He's very focused on having a fair, level playing field in terms of the markets, and he's very focused on making sure the U.S. is competitive. And he's put in place people underneath him who are also similarly attuned, and they're reaching out, frankly, to us to say, hey, what can we do to be helpful in that regard, which I think is really excellent.
One last one for you. How long is it going to take before there's a Bitcoin ETF on the NYSE?
Yeah, I think it's going to be a while. And I say that because there's a lot of firms that are looking at it. And we have lots of issuers. We had 56 or 58 issuers that issued ETFs just last year alone. And so, as you would imagine, a number of them are looking at Bitcoin ETFs, and a number of them had actually gone through the filing process. The SEC came out last week, or maybe it was the following week, I lose track of time a little bit here in Davos, and put out for lack of a better word, a paper, which asked a whole lot of questions about cryptocurrency.
I saw
and other cryptocurrencies. And really at the core of that, I kind of saw a message saying, hey, we're going to take it slow. This is not yet a mature asset class in the vein of, let's say, the U.S. dollar or gold. You know, it's a journey.
It'll be a while before that happens.
It's a journey from collectible baseball cards, you know, that kind of market, to gold. And Bitcoin has left the collectible baseball cards, but isn't quite at gold. And the SEC was very clearly saying we're gonna take our time. So if I had to guess, it's not for a while. I don't have a timing, but it's not imminent.